having it on something so we're more centered on the page versus down the lower, or what do you think?
Well, it's a little late now.
Well, yeah.
We're already going.
All right.
Hi, everyone. David Pierce here, Realtor Associate Broker with the Home Team AZ at My Home Group Real Estate. Here with Reggie Green of Fairway Mortgage and the Green team in McCormick Ranch. Here to talk to you about what's going on today in the market, what products that Reggie has to offer, and kind of what sort of tips and tricks we can give you, the consumer, so you hopefully are more comfortable in what you do as far as your purchase and your decisions.
Hey guys, how you doing this morning?
So we wanted to get into a couple different things, Reggie, today. One of which was, I know we've been talking about a lot about first-time home buyers, renovation home loans, South Scottsdale, looking for that alternative product other than just that turnkey property that's maybe been over-improved. We're really trying to look at those alternatives for the consumer, as well as you wanted to talk about PMI, how much money you have to put down to qualify, what's really necessary to get qualifying today in today's market, and because I know I've heard a lot of misconceptions out of consumers as of late of, do I really need to save 20% to put down?
Yep.
Do I really need to avoid that PMI? How bad does it hurt me if I refinance?
Gotcha.
A lot of these questions going on right now, especially with our younger buyers.
For sure. Do you want to do the renovation loans first, or do you want to talk about the PMI first?
Whatever you want, sir.
All right, we'll start with the PMI. So just like David said, there's a lot of misconceptions about PMI, how it really works, and things like that. So with the conventional loan, you're going to pay PMI in some form or fashion if you don't put 20% down. Okay, there's two main PMI options. You have a monthly PMI, which is added to your monthly payment every month, and then you have what's called a lender paid MI, where it's basically built into the rate, or you're paying an upfront fee. Okay, the misconception about monthly PMI is that it stays on there forever, or that it's this terrible thing. But in reality, you can take monthly PMI off at a certain point. So there's two ways to take PMI off. First thing, if you pay the loan down to 78% of the purchase price or the appraisal, the PMI will automatically be removed by the mortgage servicer. Okay, that option's not super common because it takes a long time to pay your principal down to 78%, especially if you're only putting 3% down. The more common option is requesting to take it off once you have 20% equity. And that's usually a combination of you paying down the loan and usually home appreciation, which has been pretty healthy in the Phoenix market.
And working with your realtor to make sure that you are comfortable with that 20% being there.
Yes.
I mean, if you don't know.
Yeah, so you can take, once you feel you have 20% equity, you contact your mortgage servicer. You usually do have to pay for an appraisal, but if you can show that you have 20% equity, you can take the PMI off fairly easily. So that's usually what you see, and it can be taken off, eventually once you have the equity.
Well, we've actually done that.
Yeah.
We actually stayed in our house long enough to where we've paid down the loan to the point where we actually had the 20% equity with what we've paid down and the market appreciation.
Absolutely.
And being that I'm in the business that I'm in, I was comfortable in calling up the bank and saying, let's do that appraisal. I know it's going to appraise for that 20% margin. Let's remove that PMI.
Exactly.
Which I think that's where it's critical. You work with your realtor and work with your lenders so you're comfortable with where your values are, so if you're going to pursue that angle. Because, knowing helps a lot.
Definitely. One of the things I also want to touch base that we're seeing a lot today is what we call a recast. And what a recast is if you're in a conventional loan, usually you can't do them with a government loan, but let's just say we deal this a lot of times when people are trying to sell a house but can't sell it before they buy a new house, but they happen to qualify with both homes open at once with their qualification. But let's just say you come into a certain amount of money through a sale of assets or whatever it may be. A lot of times you can actually do a recast on a conventional loan. And what a recast basically is you're putting a large principal payment. Usually they require $10,000 or more. And what the servicer does is they basically readjust your payment based upon a lower principal balance. So for example, if I sell a real estate asset and I get $50,000 and I want to lower my mortgage payment, I can take a $50,000, put it as a principal payment towards my mortgage, and actually recast the loan and lower my payment based upon doing that.
So working with the bank, working with your lender, working with your realtor so you know where your equity is at and where your appreciation has gotten and where you've paid down your loan to, so you're understanding all of those things so you can make an informed decision so you're not throwing money out the window.
Absolutely.
And that helps your planning further down the line. That helps put more money in your bank, and hopefully frees up those financial options for you to make more sound decisions when it comes to buying and selling real estate, because that is our goal. That's what we do.
Yep.
So, no, that's great advice. I mean, I've certainly stayed in my place long enough where I removed the PMI. The recast is a great option.
Yep.
I don't think people think of that. So, I mean, I don't think you need to save up to hit that 20% to get into the market. You can do it sooner, and then you can go ahead and plan to remove that PMI so it's not a forever thing. And I think that's what everybody's worried about is, I'm going to be stuck with that PMI forever. No, unless you're doing FHA.
And I think another important thing to talk about, which you probably will be able to talk about more educated than I am, is a lot of people think we're in this bubble because we've had a pretty good run at it in Arizona and things like that. But it's really just not the case. With the job creation in Arizona and the amount of people that are moving here and the demand for housing, we've actually been on a really healthy level of appreciation, where if you look at 2004 through 2006, you were seeing appreciation at 40% levels, in a very
we're
short
not
period
even
of time.
there.
So what's happening is we've seen a very steady, slow appreciation, which is healthy for the market and nothing too drastic. Well, so I definitely don't think we're in a bubble.
It has been healthy, and you're very right about that. I've seen those numbers, and I think it's important to say things aren't just flying off the shelf. That we're not seeing that rapid inflation. We're not seeing huge bidding wars. We're seeing it in the lower price points. But that's always the case in affordable price points. Mm-hmm. That market's always going to be hotter and faster. But those numbers change drastically as you go through. Anyway, we have 16,000 listings on the market currently. And of those 16,000, hold on a second. Sorry for the shaky video, folks. I brought some market numbers because market numbers are fun. As of yesterday, we had 16,175 active listings in the MLS. That means not under contract, just out there on the market active. We had 11,782 under contract. So, I mean, that put those two numbers together, we're kind of in that a little healthier. Inventory's still low. But then it really comes drastically changes as we look at the price points. Under 500, 11,000. Under 400, 9,000. Under 300, 6,000. Under 200, it's a small number.
Yeah.
I mean, you're talking about those are the numbers for 3.8 million people or so that live in Maricopa County. Maricopa County has been fastest growing county. We've got Los Angeles, San Francisco, Orange County. Top places people are moving, Arizona. Illinois, top place are moving, Arizona. They're stopping here before they go to Texas. And we've got major growth as far as in the tech market's concerned. We've seen growth in Far East Mesa in manufacturing. All of that's coming to a factor where we're seeing not only low inventory, but good demand for the market heading forward. I don't think the drop-off is going to be as much as people think because of those demands, where we've seen the economic growth, we've seen the population moving in. I just saw a Facebook post from somebody who just moved here out of state not too long ago, and they were raving about how little that their electric bill was and their cost of living was. I mean, we are like, oh my gosh, it's summer, our bill's so high. They're like, oh my gosh, this is so cheap.
I pre-qualify people from California all the time coming out here.
Yeah, absolutely. And I'm seeing it. I'm seeing it in McCormick Ranch. I'm seeing it in our area. They're coming in. They're redoing these homes. and they're getting top dollar because they're coming from California, they're coming from out of state, and they want to live in the desirable areas, and those homes are catching the price per square foot to reflect it.
Absolutely, absolutely.
And that's where I think we should transition into the rental loan.
Yeah.
Because, you're out there looking and you don't want to pay the premium for somebody else doing that remodel, and you want to pick your finishes. Let's go find something that hasn't been remodeled. Let's put a rental loan on it, and let's wrap it all in so it's all nicely wrapped up, packaged up with a bow on top of it by the green team for you, so you get your dream home for the next whoever cares how long.
And what if you don't like gray and white? Now you can pick your own.
Oh
right?
my gosh! You don't like gray and white on white? I mean,
yeah.
it's a possibility with gray exterior paint.
Yeah.
That's a design trend I don't mind saying.
Yeah, no, I like it.
I like it, but it's okay when it changes.
Yeah. So the renovation loan, it's an awesome loan. Basically, what you're doing is you have your Fannie Mae home style, you have your 203K, and basically what you're doing is when you go looking at houses. Okay, you don't have to look at the house and have it to be exactly how you want it right now. Okay, you can look at the bones of the house, look at where you want to live, and then you can actually finance the renovations of the house into your mortgage. So a lot of people don't have enough money for the down payment and a remodel afterwards. You can actually finance the renovation into the home loan. So we do what's called a subject to appraisal, where you bid everything out, you get everything done as far as what you want done on the house, and we come up with a value for that, and then we do a subject to appraisal of all these things being completed. This is what your house is worth, and we can finance off that thing which is above the purchase price.
Absolutely.
So
they're gonna,
awesome loan.
Yeah, they're going to note that those finishes have changed. They're going to note the improvements, and they're going to appraise the value based upon that improved finished product.
Yeah.
So, I mean, really, really cool stuff. And it pushes the point that I like to always go over, and we all know very well when it comes to real estate. Location, location, location. This allows you to go after your location first and then make the house fit to your needs, as opposed to going and trying to find that house that fits to your needs and then dealing with probably a little longer commute.
Yeah, we got a question right here. So as far as the manufactured renovation loan, I got to be honest, I've never been asked to try to do one on that. So I will check into that, Michelle, and I'll get back to you as soon as I know the answer.
Thank you very much for that question. That's a great question.
Yeah.
Yeah. It's a new product, so we've got to go out there and see what we can do.
It's not that new. It's just people don't use it very often.
Okay. New old products that we're bringing back to life.
Yeah.
Based upon the market needs.
Yeah.
I think that's really what it's coming down to. It's because of the low inventory. It's because you've got so many flippers out there, and you don't necessarily want to buy that remodel with the ticket price upgrade for the convenience fee. I almost like to call it. We did all the work, so you're not going to get that.
Yeah, a lot of the time it depends on where you want to buy. If you want to buy in South Scottsdale, a lot of times the house might not be updated how you want it, and you want to put your own flavor on it and your own spin and make it yours. You can definitely do that with the renovation loans.
Absolutely, absolutely. So let's see. Oh yeah, Michelle's looking for.
Yeah, we will let you know on that.
So I don't know. Do any other topics you want to cover? I was talking to a first-time home buyer not too long ago, and I wanted to go over this really quick.
Yeah.
There was a serious misconception there with the down payment and what you had to do as far as getting a loan. He's been taught never to refi. That was a really big deal to him. And then he felt he had to save up that 20%. And I just really want to reiterate, that's not really the case. You can actually get something with less, with a 3%, 5% down, 10% down.
Down payment assistance, 0% down.
Exactly, a lot of 0% interest. Still a lot of 0% options out there for your down payment assistance, and then you can go ahead and then build up that equity, or do a recast where you do maybe get something where you can pay it down quite a lot, and then remove that PMI. You are not stuck with that PMI forever, and I think that's just a really big point to bring back up. So Any other topics you wanted to cover today, or anything?
We can one thing I'm seeing a lot today is when someone's trying to sell their house and buy another house.
Oh, here we go.
Okay, so a lot of times people think, hey, I have to sell this house before I even start looking for another house. Okay, and it's just not true. There's really two ways you can go about doing this. One way is if your debt to income ratio is healthy enough where you can actually qualify with both houses at the same time, you can buy one house without selling your other house first.
Best case scenario, I was able to do it once myself. I've been able to do it with other clients. It means you can just go ahead and get the house ready that you've just bought, move into it, and then turn around and get the other house ready, and then put it on the market and sell it. And you're really capturing probably that most dollar out of it because of that.
Yeah, and this goes back to the recast. So let's just say you were dead set on selling your house because you were going to use your $100,000 of equity and put it down on your new house. Well, what you can do is you can do a minimum down payment on your new house, and then once you sell your other house and you have this $100,000, you can do a recast. Okay, we do that all the time right now. So if you qualify for both, you can do it. The other cool thing is conventional loans allow you to basically buy another house and put a rental on your last house, and we can use 75% of that rental so you can qualify. So a lot of times, you don't need a 2-year history if you want to keep your existing house as a rental.
Especially with the way rents have been, right? I mean, rents are going through the roof. You might want to hold on to that asset for a little while longer, capture those rents. I mean, even if it's a break even because of appreciation and everything right now, and then wait a little bit, then sell it.
Yeah.
Not a bad call. And then you can pay down your existing loan and do your recast there.
Exactly, and then you can do a contingent where you do sell your house and it's contingent on your house selling to buy the other one.
Do that a lot.
But a lot of people think that it has to be you sell your house and like a month later you buy the new one. We're actually closing these all the time on the same day, where you're selling your house and you're buying a new house on the exact same day. You take the money from the existing house, they wire it over to the new house, and you close both at the same time.
Yep, had 2, 3
very easy
simultaneous
transaction.
closings.
We do it all the time.
Yep, we can line it up. And that's where your realtor and your lender and your title become a whole team that's working for you to be basically your realtor is your project manager, lining up all of these moving parts so we get that simultaneous closing, so it's done, so it's hopefully less stressful. I can't say it's stress-free because it's just not possible. But less stressful knowing that you've got professionals there handling that transaction and bringing it to a successful closing.
Absolutely.
And that's really what it comes for, is peace of mind. So you can focus on what's important, and that's your career, which is paying for that major purchase when it comes to buying and selling real estate.
We guide you through the process. It's not stress-free, but we're definitely going to tell you exactly what to do and give you a game plan, and just follow the steps that we do, and you'll be able to get the house as long as you qualify. I mean, you have to qualify, but outside of that, we'll tell you if you do, and if you don't, we'll put together a plan and try to get you there.
Absolutely. Well, we got a lot of topics that we covered today. I know I'm going to have Mr. Green back here in a few weeks, hopefully. After Hawaii. And we'll go ahead and see him with a little bit more of a tan, and we can hopefully catch up on any of the hot topics that he's seeing or hearing about going on in his side of the business, as well as we can come back to Renegade Coffee, get a little more caffeinated, and go over just more of your questions, anything that you have to offer. I wanted to thank you all for joining in and watching us today.
Thank you, guys.
And again, Reggie Green, the Green Team, Fairway Mortgage.
Get it in there.
David Pierce, Realtor, Associate Broker, the Home Team AZ at My Home Group Real Estate, and MHG Commercial. Now remember, be positive, be productive, and be proactive in achieving all of your goals, and make it a great day.